Hey everyone, and welcome to The Explainer. Today, we're diving into something that is, frankly, the key to successful investing. And no, it's not about finding some secret stock tip. It's about building a solid foundation before you try to build your wealth. We're calling it your financial floor. Okay, so let's kick things off with something I call the investor's hidden trap. It's this sneaky, painful mistake that can completely wreck your financial plans before you even get started. So picture this. You've been saving up, you're excited, and you're finally ready to jump into the market. But what's that one risk, the one that nobody really talks about, that can bring the whole thing crashing down? Here it is. It's so simple, it's almost brutal. The trap is being forced to sell your investments at the absolute worst possible time. Imagine a crisis hits, maybe a job loss, a medical emergency, and suddenly you need cash. The market's down, and you have to sell your investments at a loss. You're forced to make a temporary dip permanent. It's a gut punch. So how in the world do you avoid a trap like that? Well, you build a defense, a strategy we call the financial floor. Seriously, think of it like the concrete foundation of your entire financial house. So what is this financial floor really? At its heart, it's an emergency fund, but it's way more than just some money sitting in a bank account. It is a carefully calculated safety net. It's one job to cover all of your absolutely essential expenses if your income were to suddenly disappear. And this right here, this is a huge mindset shift. So many of us look at a big savings account and think, ugh, that's dead money, it's not growing. But that's completely the wrong way to see it. That money has a powerful job. It's buying you the freedom from panic. It's the very thing that lets you take smart, long-term risks with your other money. Okay, so we get the what and we get the why. Now let's get into the good stuff, the how. Let's lay out the actual blueprint for building this thing. This is always the first question, right? The big one. How much money are we actually talking about here? How big does this floor need to be? The number you need to burn into your brain is this one, 12. That's it. Simple, powerful, and it's your target. That's 12 months of your essential monthly bills. And I really got to stress that word, essential. We're not talking about your streaming subscriptions or nights out. We're talking about the must-pays, your rent, your mortgage EMI, food, utilities, insurance. Just add up that monthly number, multiply it by 12, and boom, that's your floor. Now, to build it right, there are 3 golden rules. First, build the floor before you do anything else. All your extra cash goes into safe, low-risk funds until it's done. Second, and this is crucial, only after that floor is built do you start investing in higher growth things like stocks. And third, remember, this isn't a one-and-done deal. Life changes, costs go up. You got to check in once a year and top it up. All right, that's the theory, but let's make this real. Let's look at how 2 very different people, Ramesh and Radha, actually put this plan into action. So here we have Ramesh and Radha. You can see their situations are pretty different. Ramesh's basic monthly expenses are 25,000 rupees, making his floor goal 3 lakh. Radha's are higher at 75,000, so her goal is 9 lakh. It's the exact same principle, just scaled to their lives. So let's look at Ramesh. His goal was 3 lakh. So what did he do? He stayed disciplined. He put 80% of his savings into a systematic investment plan, an SIP, in a low-risk arbitrage fund. And he just kept doing that until he hit his number. Only then, once that floor was solid, did he start putting his money into equity funds to chase growth. Now let's take Radha, with her bigger goal of 9 lakh. A really smart thing she did was to not count her retirement funds, like her EPF, as part of her floor. Why? Because that money is for retirement, not for a short-term emergency. Once her 9 lakh floor was complete, she could confidently pour every single rupee of her extra savings into her equity investments. Okay, so you've seen the why, you've seen the how, you've seen the real-world examples. Now for the most important part of all. Let's make this about you. Here is your super simple action plan to get started. Literally today. It really just boils down to 3 simple things. 1, calculate. Tonight, grab a piece of paper and figure out your 12-month essentials number. 2, start. Just begin. Open an SIP in a low-risk fund, even if it's a small amount. And 3, schedule. Put a reminder in your calendar for a year from now to check in and top it up. That's it. You're on your way. Now, you might be asking, wait, why an arbitrage fund specifically? It's a great question. You're basically looking for a sweet spot. They are generally considered very low risk, which is priority number 1 for an emergency fund, but they often have better tax rules than something traditional like a fixed deposit. And we'll just leave you with this final thought. Building your financial floor, that's not the goal. It's the beginning. It is the strong, stable launchpad that gives you the confidence to build something incredible. So the real question is, once your floor is set, what are you going to build on top of it? Thanks for watching The Explainer.